Is Wednesday, November the 27th, and you can see from the opening bell, we just went straight up, broke the Globex high, which was recorded at 5 in the morning. We broke the Globex high at 1 in the afternoon and just continued to move up. There is a bit of a warning sign, however, and look at the volume in the Dow. Low, NASDAQ low, S&P 500 low. You know, we could attribute it to the fact that it was the Wednesday before Thanksgiving, so we'll leave it at that. The stock market was the advancers to decliners were roughly 2 to 1, which is going to take the oscillator just a little bit above the zero line, so it means that the momentum is swinging towards money moving into the market. So let's take a look at the key stocks. We'll run through them quite quickly because really what we see is quite bullish all around. But I want to point something out on the S&P 500. This is a monthly view, so you can see where I've anchored a Fibonacci. So I've taken the 2004 low to the March 2000 high, which was followed by this pullback, and then a double top in September of 2007, and then a pullback to exactly the same point. So we've got this rhythmic pattern happening here. So it's safe to say that this is a pattern that's something that can be built on, that would repeat itself. So we'll take a Fibonacci and we'll use this anchor, and this one, and then project what a move similar to this one would look like, because that's quite similar to this one. And it tops out at 100% right here. We blew right past the 100% projection, but we did stop at the 123.6 and then pull back to this 100%. So that gives some kind of credibility that this pattern, which has taken place over 12 years, is one to watch. And then we moved up and we stopped at the 200%. So we doubled that moved up to, we stopped at the 200% projection line and then pulled back to 178.6 and then what looks like around 150. Now we're moving upwards, and the next target would be 238.2% if this is a valid long-term projection of 33.77. But we've also got a couple of trend lines in play, and that's better if we look at it on a weekly basis. We have this point here, January of 18, October of 18, and then July of 19. We've exceeded that one, but we stopped at this one. So we have another trend line, which was recorded today, but has its origins in July 2019, April 2019, November, and proved to be support 1, 2, 3 times back in 2018, was support in 2016, was support in October 2017, and got its start in January of 2016. So that's a pretty long trend line now that's been used once, 2, 3, 4, 5, 6, 7, 8, 9 times, and today we hit that same line for the 10th time. So it may be a place to pause, but it's going to be something that the technical traders are looking at. Now let's look at the daily, and we can see we're leaving gaps in the wake here. And in fact, there's probably no gap there, but we're leaving some gaps here that need to be filled at some point in the future. Apple continues to be strong, but now we've double topped at this 138.2% Fibonacci. If we break through that, then the stock is really going to take off. And the 3 short December puts that I've sold, the 255 puts, are doing quite well. I'd certainly like to go to 6 or even 8 short puts, and I'll do that when I see we're running clear of this 138.2% line. Or should we come down and test at this green level right here, which would be a place for support. We may come down and touch the cloud in this green line, but that would be around Christmas time if we were to do any pulling back to match this high and the cloud. So we're going to keep an eye on that. Caterpillar, moving up quite nicely. Home Depot, if you followed me into the Home Depot trade earlier this week on Monday, that trade, which cost about $4,200 for 10 vertical spreads, 5 of one, 5 of another. So that I've got 5 of the December 20th. So that's the monthly 220 calls, and the 230 calls as a spread, the 225.5 and the 232.5. And that trade is now making $1,300 on a cost of about $4,200. So that's pretty good percentage. Now what we see here is the stop dead of Home Depot, which stopped at the 8 EMA, and the Chiku span at one point it stopped at the cloud, and I tweeted that, but now it's got broken out above the cloud, but it stopped because price got rejected at the 8 EMA, and we have this 38.2% Fibonacci just above the 8 EMA that Home Depot is going to strive for next. Today's volume was pretty good. This is 20-day average volume. So there was something put out on, I tweeted it anyways, saying that the options market sees a rebound for Home Depot in the Christmas market. AT&T stopped by the 8 EMA as well. Garbage mail. And the Chiku span stopped by this candle 26 days back. So there's a bit of resistance here for AT&T before it goes any higher. WDC up $1.50. Whirlpool down $3.50. The China deal looks like it may not happen again. Surprise, surprise, because Trump today signed a bill that supports the Hong Kong protesters, and that's really going to upset China just after having lost that democracy election in Hong Kong. So they're not about to do anything favorable to Trump in the near future, in my opinion. Amazon stopped at the 38.2%, but it clearly had a powerful break through the cloud, and the Chiku span is now on its way, and its next resistance is up at 1888. But if we can break the 38.2, Amazon is certainly going to do quite well. We had been looking at it getting rejected off of the Chiku span, off of the 50, having trouble with the 200, then just steering clear of this whole bundle here of moving averages, and then it just came up, and in a period of 3 or 4 days just plowed through all of the moving average. So that's real strength, and if we look at the volume, it hasn't been too bad either. So that's it for today. Where are we going tomorrow? Well, we do have this trend line to contend with. It's not tomorrow, it's going to be Friday when we come back. So have a good Thanksgiving, and we'll come back on Friday.